I'm going to make it fun for you. If you can't tell, I'm actually from New Jersey, right? Sounds the same as everybody else from New Jersey, right? No, I'm actually from a small town called Ainer, South Carolina, on the way to Myrtle Beach. If you blinked, you would have missed it. Town of 600 people. And this is my family. My 6 children, they are 17, 16, 15, 14, 12, and 6. There's a lot of them. And not a lot of us. So my husband is amazing. He takes care of my kids. Helps me take care of my business. And he works from home as well as I work from home. So I have a true accounting firm with I have a home-based business with 3 full-time employees, and then my children actually work for me. So I wrote a book called More Relaxing, Less Taxing, and it's literally why you'd be brain dead not to own a business. So I'm very passionate about what I'm going to share with you today. And, I currently reside in Greenville, South Carolina. I love to talk, unlike every other accountant that I've ever met before. And I love to educate people and just share with you how to free up money. And the biggest thing that I see in this entire industry, and here's my aha moment, is I actually got involved in the network marketing industry. I had a business and I sold it about 8 years ago, and the guy sold it to quit paying me after 4 months. And I lost everything I owned, and I had a non-compete for 5 years in the entire state of South Carolina that had anything to do with insurance and accounting. So I was completely unemployable, and the problem was I got involved in the network marketing industry. I didn't have any money. My parents actually paid for me to join, and the only reason I showed up to an event was to actually get more tax clients. So it was a way for me to market to them. And I'll tell you that my business indirectly, my accounting practice today, I just looked up the numbers, has grown 61 times indirectly in the last 5 years because of network marketing. And so I love this industry. Thank you. So what I found, I did a tax return for someone in the company that I was in, and I saved them $4,100 more than they'd ever gotten back on their taxes. And I showed up to an event, and I was like, I'm going to get these suckers because they think they're going to make money. They're not, right? But I'm going to get them as accounting clients. And so I'm going to share with them ways to free up money. So what I found is I fell in love with the industry, and I started building it, and I put about 900 people in that company, had some issues with my upline, and, long story short, I decided not to build anymore. And that was my decision because I love sharing with people why this industry is the greatest industry in the world. And what I realized is that when I was in it, people thought I was trying to sell them something. So I just started sharing that information. So what I've learned is that the average person saves $4,000 to $8,000 a year just by being involved in a home-based business. Now, what I mean by being involved, you actually have to share. You have to actually attempt to earn an income. So you can't just sign up in a network marketing company and say, I'm in and I'm going to write off everything. And why is that important? Because the most people do not share because they're scared to death of the fear of rejection, right? And so my whole thing is that I knew that this was a guarantee to save someone $4,000 to $8,000 a year in their taxes. And if I didn't share it with them, I was hurting them. Because, see, here's what I know. The average household in America makes $60,000 a year. It's sad, but look up the statistics. They're W-2 employees. So they pay on average of $14,000 a year in taxes. And then from there, their take-home is $46,000. And guess what? The cost of living in America is $53,000. So that means that as an average W-2 employee in this country, family of 4, they're literally going in debt $7,000 a year to work 40 hours a week, 50 weeks a year for 2 weeks paid vacation. And if you don't understand that your friends and your family and the people that are attacking you, the reason why they're attacking you is because they don't have the money to get started. 46% of Americans do not have an extra $400 to their name. And actually, Tim actually brought it up, is 69% of Americans now don't have an extra $1,000 to their name. So if I would have known that when I was in the network marketing industry, I would have looked at someone completely different. When they told me I was crazy, I was going to hell or jail, it didn't really matter to me. At the end of the day, I knew it was tax deductible, right? I was going to save money in taxes. It was guaranteed for me. Like, I may go to one of those places, but I'm going to save money on the way. And I knew that, and I had a different level of confidence when somebody told me I was crazy. Because I know this, you're crazy if you have a job and do not have a home-based business. You literally would be brain dead, and that's the title of my book. So Getting into it, what is a tax deductible expense? Most of y'all have been taught by people that do not understand the network marketing industry. Accountants do not understand it at all, and they teach it wrong, incorrectly every single day. And it makes me so angry because I see thousands and tens of thousands of dollars sinking into the IRS that should not be going there. So the IRS actually determines what a tax deductible expense is. And I'm going to break it down for you. It says any expense is incurred with the purpose of gaining or producing income and is incurred with a reasonable expectation of resulting in future business and is reasonable under the circumstances. So that just means if you're attempting to earn income today or in the future and it's reasonable, it's tax deductible. But here's what happens. When you start a home-based business, you literally get to redirect your living expenses and turn those into business expenses. So I'm not talking about you spending more money. You know, most people think they have to spend all this money to get involved in a network marketing company, but they don't. They get massive tax deductions just by being in it. And it's equivalent to about $400 to $800 a month. So I want to show you how this works. And when I got these numbers, it made me sick. And I will tell you, I was doing really good at just being a CFO. And I've done taxes for 18 years now. I do about 500 corporate tax returns a year in every single state. And what hit me last August, it was actually today, last August, which is crazy why I'm on this stage with you guys, is that I knew a way to free up money for people that most people didn't know. And so I could take that W-2 employee and literally, here's how it works, just so you can see the numbers. Because I had to go and figure this stuff out myself because I didn't believe it. It made me sick. So the average household makes $60,000 a year. Here's single, here's married. They have no business deductions. And even if they're W-2 employees and salespeople, they have lost all the deductions that they had before because of the new tax laws. So I love the new tax laws for business owners, but they have taken away everything for W-2 employees. And so here's your standard deduction. So now you're paying a taxable income. That's your taxable income. Here's the taxes on that. You can see $14,000 for single. Married is about $11,000. And then we have our take home. But the problem is the cost of living. And I lowered the cost of living for single. It doesn't make much difference. But here's the thing. Here's what's left over. You're stuck. So if they see it, they see an opportunity and they say, I'm in the hole every single month, then how are they going to ever take it unless you figure out a way to free it up? The second company I joined, I had $428 to my name. I was 8 hours away from home in Alabama. And I decided to join that company. It cost $421 to get started. And the way I saw it as an entrepreneur is there was no other way. I had no other option. I had $7 left over, and I had a week before I was going to make any more money, and I think we had $30 cash. So we had enough to get home. And so most people wouldn't take that chance. I took that chance because I knew that I would be homeless if I didn't make it. See, because I focused totally on network marketing, and I told people every single year, I'm not going to be doing taxes next year. I'm going to be doing network marketing full time. And my upline attacked me and destroyed me because more people on their team was coming to me instead of going to them. So I had some issues. And I decided, instead of attacking this industry or hating this industry changed my life. It took me from $9,000 a year in accounting to $560,000 in the last 12 months. It changed my life completely. Now, I'm not in the network marketing industry, but here's what I know. If you take that same W-2 income and now you add to it a home-based business, guess what? Here's all the tax deductions that are they're not tax deductions if you're a W-2 employee, but we all have living expenses, right? And we have itemized deductions, and most people think that you get massive deductions for having medical bills and medical insurance and property taxes. All those things are capped, and most people don't even get benefit for medical insurance or medical bills because your AGI is too high. So can we all agree that we have these living expenses? We have auto expenses, cell phone, telephone, all these things, right? Everybody's got the same ones. Problem is W-2 employees don't get to write them off. But here's what happens the minute you decide to be a W-2 employee and have a home-based business. Now your medical bills can be tax deductible. You can hire your spouse. Your spouse can in turn pay all the medical bills. You can reimburse him 100% for those medical bills. That becomes a fringe benefit. So 100% tax deductible in your business. You got to have a plan in order to do it, but it's about $425 to set up that plan. And I can teach you how to do that. Medical insurance, same thing. It's 100% tax deductible when you own a business. Then we've got business use of your home. And if you buy into the fact that this will cause you to be audited, do not do that. I thought so too. I was taught that in college. The tax code does not say that. So business use of your home, you can write off a percentage of your repairs and maintenance, your utility bills, your insurance, your property taxes, your mortgage. You can depreciate your home. And no, you don't have to pay it back because you get a $500,000 capital gain. You don't have to pay taxes on if you sell the house. So people tell me that all the time too. So I go against that. Property taxes, things like, so if you bought an RV and you drove it all around the country to go speak for people, property taxes, so you can write those off. Same thing with vehicle. Charitable contributions is probably my favorite. And I'll teach you a little bit in detail on this, but you can literally give from a gross income level instead of a net income level. And by doing so, that becomes a cost of goods sold item. And then you can actually write off 100% of your charitable contributions as a business expense. Sorry, I'm trying to talk too fast. So I want to get this all in. So meals, you can write off half your meals if you're talking to people or going out of town. See, here's the thing I know. Tell me your name. Ashley. Ashley, I call Ashley, and me and Ashley are friends. So I want to go to lunch with Ashley anyway, right? So I call Ashley and I say, Ashley, I got something I want to show you. And we're going to meet for lunch. I get in my car, I drive to Ashley. That's 58 cents a mile that I don't have to pay taxes on. Then I get to Ashley and I tell her what I'm doing, and I get to write off half of my meal. Then I get back in my car, I write off 58 cents a mile. On top of that, I'm going to write off my cell phone because I talked to her on it. Right? I'm going to write off my internet because I needed it to run my business. I'm going to write off my computer. I'm going to write off my new cell phone that I buy. I'm going to write off all the things that I need in order to do a presentation. And then when I get home, I'm going to write off not only my house, a portion of that, but I'm going to write off my swimming pool because guess what? It's a fringe benefit too. And y'all are supposed to be really happy about that, right? So here's how my pool was a fringe benefit, and I really didn't know that until I dived into the code and was writing my book. So you can offer an athletic facility, a gymnasium, same thing. You can offer a tennis court, you can offer a swimming pool, or you can offer a golf course on your property to your employees. Guess who's my employees? My spouse and my children. It becomes 100% tax deductible as a fringe benefit because I offer my employees a right to swim in my swimming pool. That's pretty amazing. Yeah, exactly. I thought y'all would get much happier about that one. But anyway, so cell phone, internet, you can write off a percentage of those. Travel. Here's the biggest thing about travel. Take your family with you. I typically have one of my children at every single event. And I would have my 17-year-old daughter with me right now. So guess what? And I not only get to immerse them in everything that I'm learning, but it all becomes 100% tax deductible because they work for me. So how are your kids? That's another one. And I center all of the continuing education events that we do around some sort of vacation. So I'll come in for a couple days before or a couple days after or both, and I get to write off most of everything that we're doing as a tax deduction, which is a huge, huge deal, guys. Hiring your kids, I'll go into detail on that one in a second. Everybody loves it. And I have 6 children, so I can pay them $12,000 a year. That's $78,000 a year I don't have to pay taxes on. Have more kids. Right? Have more kids. Or steal some, right? Alpha supplies. So those are, so can we agree that we all have those whether we're W-2 employees or not? Or whether we're home-based business, same thing. The extra expenses are things like advertising, which you may not have. Continuing education, which I think is the greatest thing on the face of the planet. Since I started providing and putting in time and effort and energy into being a platinum partner with Tony Robbins, my business has grown another 10 times. It's been amazing. I've written a book. I became an author. Spoke on stage with Les Brown this year. I'm speaking at Beyond Leadership for Eric Worre. I spoke for Tony Robbins in June, which is amazing. My life has completely changed. Then you have dues. So some of you may have dues, and that's okay. So if you have dues, those are all tax deductible. And then you have cost of goods sold. So the thing is as a customer, you don't get to write off your product. But as a rep, you do. I mean, if you are using the product and you're sharing that with people, don't you have to use it in order to share that? So that becomes tax deductible, and then all of your samples, everything that you're giving away becomes tax deductible as well. And then the biggest thing I think people don't understand are the tools and the systems that you need in order to be in business. See, like I know what Sherry Tree and Esther have, and she'll share that with you tomorrow. Like it was a game changer for me and my family, understanding people. I was able to actually understand my child because she's not the same as me. She's a complete introvert. Like she's a perfect accountant. And I love her, and now I understand her, and we're able to relate better. But then we're also able to do that and carry that into business and understand people. So all of those things are tax deductible. So get the tools and go to the events, because being around the people is not only going to help you grow your business, but it's also tax deductible. And bring your kids along. So, got to do this fast. I want to show you, here's the thing. This right here, your total expenses are $34,000. I'm not even going to take that much in deductions. The average person I see has about $25,000 in deductions that they get to take by having a home-based business. So here's the thing. You've got that same W-2 employee. When you add a business, you have the $60,000 worth of income. You have your business deductions now of $25,000. You've got your standard deduction, your taxable income, your taxes, your take-home, your cost of living, and it's left over, and now you're in the positive. So you're literally, the difference is almost $6,000, and you haven't made a dollar yet. But here's the thing. If you have $6,000 in savings, you need to make about $12,000 in taxes or in income in order to be equivalent to that. That's a big deal. So that bring home is about half. So if I made an extra $6 an hour this year, then that would be equivalent to the tax savings that I had by joining a network marketing company. It's pretty much a no-brainer, right? So here's what you have to do. You have to put in 3 to 5 days a week for 45 minutes at a time and doing daily income-producing activities. And so what does that mean? That means share. Go to the events. That will teach the IRS and tell them that you're attempting to earn an income whether you do or not. You could suck. Like Ashley may tell me, Courtney, you're stupid. You're going to hell. You're going to jail. And I'm like, girl, you're not educated. You have no clue what you're talking about. Because you are paying taxes before you get to buy any of your needs and wants. I make money, I buy my needs and my wants, and then I pay taxes. Who's smarter? Giving away 40% of every dime you make to the IRS, or taking that 40% and giving that to someone else and helping them change their life? See, instead of giving money to the IRS, I get to give more. I get to help more people. I get to hire employees. And you need to understand there's 2 tax systems in this country. So everything I do is legal, moral, and ethical. So the one tax system is for W-2 employees. It was created to take your wealth. There's the second tax system that was created for business owners. It was created to build wealth. So we as business owners create more economy, and we create more employees, and they pay the taxes. That's how it works in this country. If you don't like it, I'm sorry, but that's just how it works. So people just don't comprehend that. So put in the time. Now here's some deductions. Here's some more detail. This year you can now take a standard deduction or actual method. Used to, standard deduction was better. It's 58 cents a mile currently this year. But so here's an example. 15,000 miles, 58 cents per mile. That's about $8,700 in a deduction that you can take. Now, with the new tax laws, you're actually better off to do business usage typically. So business usage, you've got to determine your business mileage, but divided by your total miles, which is your business use. So if you had 8,000 miles, divide that by 10,000, that would be 80%. So 80% of everything. Gas, oil changes, mortgage interest, supplies, car washes. Multiply the total for your business and divide that, whatever your total is, and times that by your business use percentage. So $12,000 times 80% would be about $9,600. But that's not all. You also get to depreciate your vehicle. So this year, actually 2018, the tax laws changed, and you're actually now able to take a $50,000 car and depreciate that over 5.3 years, as what used to take 18 years to do. So here's the deal. So if you bought a car in 2017, which I did, I'm about to trade that for a Tesla, and I'll show you that on the next slide. But the first year, you could only take $11,160. The second year is $5,000, and the third year is $3,000. With the new tax laws in 2018, when you bought a new vehicle, you now get $10,000 the first year, $16,000 the second year, $9,600 the third year. So my BMW that I bought December 2017, because I didn't know these tax laws were coming out, I would only be able to take $3,000 in a tax deduction this year. If I bought a new car, I can take $10,000 this year. Next year, I can take $16,000 as opposed to $1,875. It's a no-brainer because it's about 40% of every dollar that you can take in a deduction. You don't have to pay taxes on it. Yeah, huge deal. And it doesn't have to be new. It just has to be new to you. So here's my Tesla concept. I had a financial advisor to come up to me, and he's like, Courtney, we need to invest in some appreciable assets this year. And I'm like, no, what we need to do is buy a Tesla. And then when we buy the Tesla, they don't have the money to buy the appreciable assets. And he's like, you make no sense whatsoever. So here's how it works. There's no gas on the Tesla. I want a Tesla Model X. If you buy a vehicle that weighs more than 6,000 gross vehicle weight, the first year you can write off 100% of the entire vehicle and not have to pay taxes on it. So the Model X is 6,000 gross vehicle weight. So I can write off 100% of that, which is $106,000 in a deduction. I get a $3,750 electric car credit. It drives itself so I can work more, right? I mean, who doesn't want to work more? Will get me back $16,000 in credits because of earned income credit and child tax credit. That's a huge deal. Plus, it saves me at least $30,000 to $40,000 in taxes. Nuts, okay? So it actually pays me almost, that's $50,000 to buy a $106,000 car. Now, does anybody want to go buy a Tesla? Yeah, exactly. So time is money. So hiring your kids. Here's one of my favorite. Kids are expensive. They cost a lot of money. So you hire your kids, and you pay them, and then they pay for their stuff. So instead of paying for college, instead of paying for video games, smartphones, you pay them, okay? And you pay them to do certain things. Like one of my sons will typically be here videoing, taking pictures of me. Then afterwards, he'll actually help me sell. His name is Wells. He's the best salesperson on the planet. Sherry and Esther and Jason can tell you that. So I engulf them in this business, so they want to be a part of it. And on top of that, I'm giving them the responsibility. So I pay them, they pay for their stuff. The first $12,000, I don't have to pay any taxes on it. They don't have to pay taxes on it either, because that's the new standard deduction. And so on top of that, if they're under the age of 18, there's no unemployment taxes. There's no FICA taxes that you have to withhold. Unemployment, they're not entitled to it. And FICA, you don't have to pay it under 18. Plus, you don't have to deduct federal or state taxes on them because they don't owe them. So 12 times 6, $78,000. That saves me almost $30,000 a year in taxes I don't have to pay. It's insane. And I'm paying the same amount. I'm giving them the money anyway, so now it's just tax deductible. Social giving is my favorite, okay? There are so many nonprofits in this country every single year that go unfunded. And people just don't understand how to give. And if you came up to me and you said, hey, this is a nonprofit you can give and you're going to be able to write off on your taxes, I would tell you, no, I'm not. And 96% of Americans aren't able to actually get any benefit from giving money, which is sad. So here's the thing, even if you gave through your business, it flows to your personal tax return. And if you don't have enough in itemized deductions, you don't get that benefit. So here's my way of fixing it. I believe that if you help enough people get exactly what they want, you'll automatically get what you want. Zig Ziglar is an amazing human being, and I had the privilege of seeing him when I was about 19 years old. And so by giving from a gross income level instead of a net income level, that becomes a cost of goods sold item, and that becomes 100% tax deductible. So what I decided to do is I had a nonprofit that I fell in love with called Manna Relief. They provide the only whole food plant-based nutrition to children in need all over the world. And they have a medically fragile program with kids that were told you don't have a chance. And I provide food to those children in the United States. It has completely and utterly changed my life, and how I did it is for every dollar, I give a serving of food. And it sounded like a lot to me. In the first month, I literally did not have the money to give them a check, and I gave it to them anyway. And the IRS sent me $25,000 the next week. I was waiting for 3.5 years on a refund the guy held up because we changed addresses, and they finally sent me that check. The next month, I sent a check. I didn't have the money to pay for it. My husband's grandma literally called us and said, I want to do a family meeting, and she gave us $5,000. Giving changes everything. And that's what we were put on this earth to do. And don't wait until you have the money to do it. Just do it now. And if you do it right now, it will change, not only change you, but it will change everything. It will change your whole entire organization. And so, I love that, and that's what I do. So I did this as of June 30th. We were able to feed 558,033 servings of food in 1 year. Yeah. But what's better is every single month it grows. So we were able to feed 74,000 servings last month. And the thing is it's not about money, because I was ready to stop at $10,000 a month. That's all I needed to provide for my family. But if I don't make more money, then children die. 6 million children die in this world. Every 6 seconds a child dies. And I literally think about that. So it's not about the money, and it's about saving people. I love helping people. I love freeing up money for you guys, but this is my passion. And because I do it, now I'm able to help more children. So I love that part. How to keep more of your money. This is a big one. You need an LLC. Not necessarily the minute that you join a network marketing company, but when you start making money, you need an LLC. And why? One, it limits your liability, but allows you two things. You can treat your business as a Schedule C, which is you're going to pay the most in taxes on, or you can treat it as an S corporation for tax purposes. What that means is that allows you to bypass almost all of your self-employment taxes, which is 15.3% of every dollar you make typically goes to self-employment taxes as a business owner. See, as a W-2 employee, we pay 7.65, and then the employer matches that 7.65. So here, if you're self-employed, you'd have to pay all that. So here's how it works. If you made $60,000 a year net income, 15.3% of that would go to self-employment taxes. So this could virtually save you about $9,000 a year. The more money you make, obviously, the more savings there is. And there's more tax strategy that goes around that. You have to create a paycheck for yourself, but you can only have to create that paycheck to be about 20% of your net income, which is huge. So if you made $100,000 net, then you'd only take a $20,000 paycheck. The other 80 would pass through to you without paying that self-employment taxes. It would save you almost $12,000. So huge, huge deal. So in summary, there's never been a better time to own a business. All the W-2 employees who are salespeople in this country lost every benefit that they had. Unreimbursed employee business expenses went away last year with the new tax laws. So they're spending all this money on themselves and on their business to grow as a W-2 employee, but they're not getting any benefit, so they can't write that stuff off. One of my clients lost $35,000 this year in tax deductions. Like, that was how much he paid in taxes. So business owners are going to get better and better as these new tax laws come out. So take the deductions you're entitled to. Don't let anybody tell you can't take them. Don't let anybody tell you this is going to cause you to be audited more. If you have an S Corp, you're less likely to be audited. I can tell you that much. But the other thing is that take the deductions you're entitled to. Stop overpaying in taxes. 93% of business owners in this country are overpaying. Forbes said that just recently. Hire your spouse and hire your kids so you can get more tax deductions, and don't do your own taxes, because if you get audited, nobody can represent you in that audit, or nobody's going to represent you, and you're more likely to be audited as well. So, and I will tell you, make sure that you're compliant. I'd keep the receipts. I'd keep your bank statements. I would make sure that you had a really good tax software, and we can help you with that as well. So I appreciate your time. Oh, let me tell you one more thing. 20% pass-through entity deduction. You don't get this as an employee. 20% pass-through entity deduction says if you have an income from a business, you don't have to pay taxes on 20% of it. Huge deal. So this is a new thing with the new tax laws. So I love the new tax laws. Here's my book. I'll be out there. You can buy it if you want. I am a full-service accounting firm, or my team is. We can help you in any way, set up LLCs, all that good stuff. But I have some free stuff online. One is called More Relaxing, Less Taxing, and it's a Facebook group. I put a lot of content in there. So I appreciate your time, and I thank you so much for allowing me to speak.